Hi, this is Jin Rong, Market Strategist for IJ Singapore. The November Fed meeting has concluded last week, where we saw markets basking the hope that the US Fed is likely done with its rate hiking process. While having a data-dependent Fed means that US policymakers' views could still be easily swayed over the coming months, there have clearly been more reservations lately among policymakers towards further rate increases, and that served as a catalyst for extreme bearish market sentiments to unwind in the near term. As we head into the new week, there are three things that we have on our radar. First up, we have the RBA interest rate decision on Tuesday. With the more hawkish rhetorics from the RBA October meeting and the strong run-up in economic data, expectations are leaning towards a 25 basis point rate hike from the RBA this week. It will be a close call, with other major central banks such as the US Fed and the Bank of England appearing to have ended their hiking cycle, whereas rate pricing for the RBA still remains mixed. If we look at the Aussie dollar, I believe a more hawkish tone from the RBA could provide further support for the pair, which is already attempting to bounce off the 628 level last week. Nevertheless, I believe an eventual move above the 651 level may still be needed in order to provide more conviction of a move to retest the 674 level next. Next up, we have China's inflation rate out on Thursday. Expectations are for China's October CPI to revert to deflation at a negative 0.2% rate. Similarly, producer prices are expected to turn in a deeper contraction in October at negative 2.9% from the previous negative 2.5%, and this will mark its 13th straight month of contraction. I believe the inflation data is likely to reinforce the weaker than expected PMI figures that we have seen this week, which continue to point towards subdued growth conditions and may further add to calls for more policy support from authorities. Lastly, we have the US consumer sentiment data out on Friday. With still above target inflation, tighter monetary policies, and declining savings rate, the upcoming US consumer sentiment data will provide fresh views of how US consumers are holding up. Historically, a sharp decline in US consumer sentiments tends to be a harbinger of recessions. Therefore, if we were to see a continued trend of improving sentiments, that may potentially offer some pushback against recession fears. That's all for now, and I'll see you next week.